hello and welcome to this edition of Closing Trades right here in ET Now with me, Aisha Faridi, Nikaj Dalme in the studios. And today has really been one of those 1% kind of move days from the highs to the lows. We started off quiet, picked up 0.5%, got that sold into. Every dip is getting bought into and every uptick is getting sold into. It's been one of those just drag your feet kind of days for the market. Having said that, a lot of individual movers for sure. So BEL is holding up very smartly. There's a Tech M which is holding up quite nicely. Reliance, after that 5% of a bump up move, it's actually seeing a 2.25% follow up. And at large, one would say it's technology which is actually leading sectorally today. The breadth of the market, while it may be tilting in favor of the declines, but the swings there too are pretty huge. So TI India, for instance, is holding up 5%. PNB Housing, after its numbers, is up 4.5% in trade. Sona Comstar is higher by over 4%. Prestige, HAL, these are all other names which are looking quite good on the other hand. On the flip side, an Oberoi Realty, TVS Motors, Tata Technologies, Oro Pharma, these are where you're seeing dots of red. So yeah, truncated week once again for us, and given the volatility in the global news flow as well as the market moves, can't blame this kind of consolidation.
You know, Aisha, consolidation is the big headline news, but it's not that the market is dead. I mean, look at the catch me if you can catch, syndrome. Defense stocks, they're simply catching up. So one lagging leader in this market, or one lagging erstwhile leader in this market, has been the PSU basket, which were the real, horsemen of the 2001 to 2004 or 2025, 2004 market. They've not participated at all. And now the PSU stocks today, like, defense, select PSU banks, few of the other, side PSU names, they are the ones which really are having a day out in the sun. So you got BEL, you got Mazgaon, you got, the entire space, so to speak. Now, this has got nothing to do with what is happening in terms of geopolitical tensions. This is simply a catch-up rally which is there. And I think this is something which we need to admire. So I think, are we reaching that stage where the last, underperforming lot is also catching up? Maybe yes. Is this market running out of idea? No, I would say it's a complete market where everything is now rising because of this rising tide phenomenon. So Kunal, the Nifty may not look very charged up, but the erstwhile leaders are now catching up.
Yeah, they're catching up, and rightly said, I think individual sectors like defense, is doing pretty well for itself. This was one of the space, in fact, the entire PSU basket over the last, few weeks had been underperforming. So that's playing a very good catch up for itself. We're seeing many different stocks, actually coming back towards 52-week highs, and, some of them are at lifetime high levels like Mazgaon Dock. BEL, HAL, these stocks are now in very close distance of breaking past about their 2024 highs. So which means that we are looking at a point where the momentum seems to be strong, and it's been backed by some very strong volume, some set of data points. It's not as if that you're seeing one-off recovery into the stock price of a 10-20% and then these stocks remain sideways. You see those bouts of 3%, 5% up move, and that too on a consistent basis for many of these stocks, and that makes the trade a lot more attractive, because you tend to see a lot more higher participation when you see such kind of a slow, steady and a gradual moves into sectors.
And I think, the truth is in the numbers. Look at a HAL, for instance. In the last 5 days alone, it's moved up 4%. In the last 1 month, it's a solid 7% uptick that you've seen. Year to date, of course, it's not as much. The big move has really come in the last 1 month. It's been a 9% mover. But hold your breath there. Look at a Bharat Dynamics, for instance. In the last 1 month, it's seen an uptick of 22%. Year to date, 35% of an uptick. And the last 5 days, it's moved up 7%. Mazgaon has been one of the other phenomenal movers. In the last 1 month, a 12% uptick. Year to date, almost a 29% bump up is what the stock has seen. And BEL, of course, the sort of doin of the pack, that also has moved up about 7.5% on a year-to-date basis. Last 5 days, it's moved up about almost 2%. Of course, a large move coming today too, which is, it's the leader in the pack right now amidst the Nifty movers. It's seeing a good 3.5% bump up. But Nishal Maheshwari as well joins in on the show right now. Nishal, hi, afternoon. Good to have you on the show. Guess defense stocks, Nishal, they're back in the fray. A lot of order wins as well. And now sentimentally too, you're seeing a tilt towards these names. What are your thoughts?
Afternoon. Thanks for having me. Yeah, I think basically given the geopolitical situation, I think we are having this kind of a trade there. But having said that, I think especially in March, there were a lot of orders basically which have gone out to all these companies. And I think partially that is also getting reflected. These stocks are underperformed for some time initially, and sort of a catch-up game. But at these prices, I think once again, the valuations are going to now start becoming looking pretty expensive for most of them. So you need to be cautious basically. Yeah, it's a good trade, but I think for long-term buying, this is not the point.
Nishal, so are markets really worried about the geopolitical tensions? What are markets pricing in? I mean, is this something which is a real risk per se, or markets are saying it's time to move on?
So, afternoon, Nikunj. I think, see the situation at the moment, I don't think so. Market is pricing in a very big escalation. So as we go along, and if there is, I'm saying the escalations are much higher than expectation, then you might see market reacting negatively. But historically, we have seen that after the initial few days, we have seen in Ukraine war or even during the earlier skirmishes which India and Pakistan had, I don't think the market reacted very negatively except for a few initial days because there was never any escalation beyond a point. So I think if that is the kind of situation, I think market is just maybe take a breather for a few days and then go ahead basically looking at the earnings and everything else. So that is the situation at the moment.
That's the overall texture of the market. Abuja numbers out, and I think there is an extraordinary item there in the PAT. It's down about a good 51%. We'll try and dig out more details on that. The EBITDA, though, that has jumped up on a sequential basis, standing currently at 1700 plus levels. But Bajaj Finance and Trent, they're on our radar. Let me quickly take it across to Gaurav and find out what to pencil in. Varun, I beg your pardon, not Gaurav.
So if you look at the quarterly update that Bajaj Finance has given, that was good because the customer acquisition that the company has done was good. The AUM growth, that was also good, and the loan growth was also good for this company. If you look at the new loans book, that was up by around 36% on a year-on-year basis, and the AUM that has by around 26%. If you look at the deposit growth, that has also shown a good growth of around 19%. Because of this, because of the support by the healthy customer acquisition and also rollout of new products, we are expecting the overall growth of this company to be good, and that's the reason we are expecting the NI to go up by 23% and the PPOP to go up by 27% and the profit to go up by around 19.5%. Now the margins, if you look, they are expected to contract a little bit in this quarter because some of the operating levels that the company used to get, that would flow in the coming quarter. We have seen rate cuts that would impact the company in the coming quarter itself. Yes, but the interest expenses, if you look, they are expected to peak out this quarter, and hence this quarter might be the last quarter where you're seeing some decrease in the overall net interest margins for the company. From next quarter, we are expecting the net interest margin for the company to actually increase. The credit cost, they are expected to decline by around 5 basis points this quarter, and also the overall collections and recovery, they are expected to stabilize a bit, and that will help the overall profit and loss and also balance sheet of the company. Other than that, keep an eye on overall guidance of the company, and also other than result, the company is also going to announce bonus or stock split. So that's also an important event that you need to keep and watch on.
All right, let's also now, we are looking at Ambuja numbers right now, but defense stocks are up today as India and Pakistan tension, they surge. My colleague Kanishka joins us with the key takeaways from the Motilal Oswal report on the aerospace.
Well, absolutely. In a recent session hosted by Motilal Oswal, Captain Vishal Kanwar, who's the managing director at PwC Advisory India, he shed light on the growth potential of India's aerospace and defense sector, which has been in the spotlight since the Pahalgam attack last week. Now, defense stocks have been witnessing an up move since. Now, let's look at the key highlights from that discussion. Remember, India currently spends about 9% of its GDP on defense, but as the expert points out, there's a need to push this figure to about 4%, which is in line with global peers like Germany and Japan. This is to meet both national security imperatives and indigenous technology needs. Now, the Indian aerospace market is also gaining momentum, led by DPSUs like HAL, Bharat Electronics and Mazagon Dock shipbuilders. Meanwhile, private players like Tata Group, Mahindra and Bharat Forge are also making their way in the aerospace manufacturing space. However, the sector still remains at a relatively early stage compared to India's Army and Navy programs, especially in the indigenization and engine technologies which still rely on imports. Now, looking ahead to 2047, as the expert points out, India envisions becoming the third largest defense spender globally, increasing its defense capex allocation as a percent of the budget from 22% to 40% and boosting R&D spending from 1% to a massive 10% of this expenditure. Overall, a very positive view coming in on the domestic defense sector, which PwC's Captain Cover believes has a huge scope of growth over the long term. In the near to medium term, he believes that the government will have to take a balanced call on domestic manufacturing of bigger platforms and imports.
Defense has outperformed because, like I said earlier, also that we had been recommending, when the market had corrected, stocks like Mazagon Dock had come to 2200 levels. HAL was available at 3,900 rupees. So these stocks from those levels have come up. So I feel that the outperformance may continue for some more time. I think my targets are a little higher. So I booked some profit in Mazagon, recommended some profit taking in Mazagon, but still holding on to the significant chunk even in Mazagon for clients, and even HAL for that matter. Then there's there are small stocks also which have been doing well. They're like something like a technologies. So they have been doing well, and I think even they should continue doing well. I think there's some outperformance still, and there is definitely order flow which is coming their way. For shipping specifically, there are further orders expected for the companies like Mazagon and Garden Reach Shipping. So I think these, if someone has been able to get into them at lower levels, should hold on to them and ride from these levels to get another upside of about 10-15%.
Okay, Ambuja numbers, let's try and analyze those. While operationally things look okay, but it seems like there is an exceptional item in the pad. But Sharad is here to dissect the numbers for us.
Well, operationally, the numbers are towards coming on the inline side, and of course, the numbers you are looking at sequentially, you look at it, the other income has actually fallen down by almost 58% sequentially. Now, of course, there has been some tax adjustments also, how the merger has happened. Now, the revenue itself is up 16.5% sequentially. PAT, however, if you look at it, there's an other income adjustment to it. Overall margins and EBITDA, that has actually done well for the company. And interestingly, for the FY25 itself, the guidance which was given, that was earlier given between 4 to 5%. But the company has surpassed that amount. That's coming 6%. If you take the entire FY25 revenue, that is coming the highest levels, more than 35,000 odd crore rupees. Ambuja Cement also stated that the company's growth for FY26 is anticipated to range between 7 to 8%. Now that's on the higher side of the range as compared to their peers. What they are expecting for the cement space, as the pricing power that has come back, and as per channel checks itself, what we are hearing is that this month itself 15 rupees per bag of price hikes has been taken. So for cement industry, the pricing power is coming back, and also after 2.5 years of consolidation in the space, especially in the mid cap and the large cap space for cement, now it's looking that value might be emerging. That's what the analysts are stating. But overall, the results, if you look at the operational and remove the other income aspect of it, the numbers are coming in line to strong.
Trend numbers are also expected, and trend numbers are going to be crucial because it's expensive stock. But if they're able to do that magical number of 40 plus, then we could be in for an exciting patch for trend. But in terms of expectations, what is the market setup like? For that, let's go to Snehi.
You're expecting a largely muted to weak set of numbers for trend for Q4. Remember when the company had come out with its Q4 update as well, that was very weak. The stock had plummeted 19% that day when the weak Q4 updates were released on the exchanges. But here's what the street is expecting on a consensus basis. Standalone year on year, we're expecting the revenue to come at 4,131 crores versus 3,187 crores, which is an uptick of just 29.5%. Remember last quarter the revenue had gone up by 37%. So we're expecting a fall in the revenue growth trajectory. EBITDA is expected to come at 609 crores, which is up almost 27.7% on a year-on-year basis. Net profit here is somewhere we are expecting to see a lot of pressure, because you're expecting this amount to more than half at 303 crores compared to 54 crores this time last year, which is down 54% on a year-on-year basis, and consequently also on EBITDA margins we're expecting to see some pressure at 14.7% compared to 15% on a year-on-year basis. Now, what are some key expectations from Trend's numbers? The revenue growth that we're seeing at 29.5% compared to 37% in the previous quarter is going to be on the back of moderation in SSSG. Same-store sales growth is what we're expecting. Operate deleverage will weigh on EBITDA margins. Westside and Zudio have each added 10 and 122 net stores on a sequential basis in Q4, now bringing the total number of large box stores for Trend more than 1,000. Factors to watch when the numbers come out. Any outlook on SSSG growth and commentary on that front. Demand outlook on metros and demand coming from tier 2 and 3 cities, store expansion guidance, as well as commentary on competition, especially after Shein's foray into India. But well, yes, to sum it up, we're expecting a weak set of numbers from Trend for Q4.
Okay, that's Trent and Bajaj Finance on our radar. The numbers should be out pretty soon. But Kapil Shah as well joins in on the show. Kapil, just analyze the charts for us, both Trent as well as Bajaj Finance.
Yes, good afternoon, everyone. So coming back to the trend, the trend from a good period, it is into the sideways trend. We can say the moving averages that I am showing, that is also quite flat, and it is having the swing high and swing low in the range of 4,700 to 5,700 level also. And right now the stock is trading at a 5250. So technically there is no any kind of the thrust that we are witnessing. So it is more of like a consolidation chart that is there.
You know, it's just one of those flat days for the market. And a flat day after the kind of rally what we've seen, no one should actually be complaining. Nishal, we have what could be called as this 90-day window. The tariff negotiations have been paused for 90 days. So out of 90 days, 30 days are approximately over. 60 days are left. The point is, what will happen after 90 days? Does this market have a shelf life for 60 days and then volatility will kick back? कोई बात ही नहीं कर रहा है निश्चल, कोई बात ही नहीं कर रहा है. Nobody is talking about this deadline of 90 days. See, Nishal is saying I cannot hear him. Even he's lost his voice. Or the see, on tariff, everybody is losing voice. Nishal. Okay, now you'll have to unmute. Again, I can't hear him. I can see him.
Yeah, sorry.
Yeah, this tariff has made everybody speechless. I accept it now. Now please go ahead.
I'm also speechless. So everybody wants to forget that phase basically. But I think 90 days later, it is going to come and bite us. And one thing is becoming clear, basically, it's not going to be the basic 10%, which initially everybody of us have thought. And the market, I think it should be closer to 20% kind of a number across the world. And that's not going to be a good thing. So that is what my worry remains to be. Yes, you are right. Basically, nobody's talking about it. But when the reality strikes 60 days later, I think there has to be an adjustment across the world. So this is going to be so that's why I think the market, the nervousness is there basically, whether it is because of the geopolitical issues, or I think the larger issue still remains to be tariffs, where it is going to finally settle. Now, yesterday, I think Trump has said that there is going to be few components in the auto component side where he's going to be lowering the tariffs. Instead of a 25 or 45% for various countries, he's looking at a few components. That's why you're seeing some of these auto component stocks today doing well. So I'm saying it's going to be totally bilateral, industry by industry. So there is no clarity. And I think that is what is going to actually impact the growth across the world. When you do not have clarity on these kind of things, nobody is going to be putting fresh capacities, fresh growth capital out there. And that's what is going to slow down the whole economy, the world economy, and the countries within. And that's what the market is worried about.
Nishal, great to have you on the show as always, and finally get your audio on what's really going to happen after this 90-day long period. But we'll take a very quick break. Nothing's really happening in the market. We're still status quo and absolutely quiet. Let's see what the last half an hour actually has in store for us.
how are you approaching this market? Ek side tariff, ek side opportunity, right?
Absolutely. Absolutely. And I think, Nikunj, we are forgetting the tariff. It's still a sword hanging over our heads. We will have to see how things pan out. So I'm definitely advising investors to play a bit safe. So focus on domestic themes, focus on, let's say cement. Now, this is as domestic as you can get. There is nothing which can affect related to tariff as far as cement is concerned. Things are improving in the cement. We have to, of course, keep watching the space for volume improvement and pricing power, how it comes back. The cement companies, at least the leading ones, are coming up with good numbers. So that is one segment where I've been recommending buy for quite some time. The other space where we have been positive is construction, infrastructure. I think Government of India is committed to spend about 11 lakh crore in this current fiscal. So roughly translates to close to about 1 lakh crore per month. Quite a lot of spending. So benefit will definitely go to India-focused infrastructure and construction companies. The last but not the least is power. I think we believe there is a structural positive and structural change happening in the Indian power sector. And this momentum is expected to continue for next 5 to 10 years. Mostly things are domestic. Tariff has nothing to do with it. So focus on the leading power segment players, whether it's the power generators or transmission companies, financing companies, even component suppliers. I think this entire segment will witness a lot of positivity. So if you're building a long-term portfolio, focus on these segments. I'm not talking about FMCG yet. Yes, it is domestic focused, but there are still challenges on demand as we are witnessing that, the companies coming out with the numbers and talking about demand challenges still.
Kunal, we are in for, looks like a decent close for HPCL, BPCL, Pidilite. Is this entire trade in commodity consumers, especially oil consumers or crude consumers, coming back?
I'll still take it with very on a day-to-day basis.
But thanda sound kar rahe ho yaar aaj.
Yeah,
Like the Nifty.
so it started off Sunday, that's why in the market is Sunday. But any which ways,
I think it's the ice cream conversation during the break which has rubbed off.
I have always wondered that why ice creams in India have not done well. You say that okay, India is a hot country, and now just think about it. I mean, India should be having a booming market of ice cream. Why? Because it's a cold country. Refrigerations now have really migrated.
Penetrated, yeah.
But the per capita consumption of ice cream in developed countries versus in India, I think in India is nowhere there. I mean, it is so sad to see that even HUL is looking at selling the ice cream business. And it did not sell, so they had to divest it so that one day somebody else will buy it.
Cola works better, right?
Yeah.
Cola wins in the, cold, what do you call it? Confectionery?
No, it's a carbonated beverage.
No. What I'm talking about is, what do you call ice cream soda category as a category?
Good need to work on that. All I know, ice cream is not doing well, and the stock
sweets
of
are confectionery.
Sweets and cola is sugar water. Let me put it this way. So whatever you want to call sugar water, that's what you call it. Yeah. No, but Varun Beverages, it is one of the most expensive bottlers in the world. Because you have levels of the bottling companies in Turkey, bottling companies in other countries, and Varun Beverages is right up there. And now there's another interesting disruption which is happening there, is that Campa, which is owned by Reliance, is slowly but gradually eating into market share. 10-12% market share has been eaten by Campa already.
So ice cream is considered a type of confectionery. I was right. But yeah, we should ask Sudeep Bandyopadhyay why ice creams actually don't work well in India.
I think, Aisha, it's pretty much the issue of affordability. The ice cream per cup or per scoop comes at a much higher valuation compared to many other, quick hit sugary content. Like you talked about cola. I think cola nowadays, of course, there's a huge competition. Everybody is introducing product at 10 rupee segment, 10 rupee block. So it comes much cheaper, where ice cream is expensive. I think that's one explanation which I can logically think of why ice creams don't work as much as it should work, considering we are a warm and hot country. It does work very well in West, which are by and large cold climate. but somehow, we still prefer to drink tea, coffee, or, go to cola.
Okay, there's some live update also which is coming in, and days after the Pahalgam massacre, we've that of course claimed the lives of 26 innocent Indian citizens. Prime Minister Modi will now be chairing a second cabinet committee on security meet tomorrow. Let me take it across to my colleague Sumit Chaturvedi. He's joining in for some live details.
Well, a number of steps have been taken since Pahalgam massacre last week, and the situation is developing very fast. Tomorrow, Prime Minister Modi will chair this important meeting of CCS Cabinet Committee on Security. It will have the ministers, other cabinet ministers, including FM Sitaraman, Rajnath Singh, Defence Minister, Home Minister, and a number of other ministers. It is second such meeting in a span of just 4 to 5 days. Well, definitely it is to take into account the defense preparedness when it comes to India's position after the Pahalgam attack, and a number of other point of discussion could be there as well. Since morning today, well, J&K government has banned 48 sites in the Kashmir Valley, which are out of bound for tourists, ranging from Gurez in some deep valley to Dal, some resorts at the Dal in Kashmir, in Srinagar. Apart from that, today government has withheld the Twitter account of Pakistan's defense minister because of some provocative statements, and intense counter-terrorist operations are going on in Kashmir Valley. So situation is developing fast. It is fluid as we speak. So the things are happening on an hourly basis. We'll keep on, of course, bringing all the developments and details to you.
Sumit, thank you very much. Sudeep, from a market standpoint, the geopolitical flare-up, is this something markets are prepared for, or markets are assuming that nothing will happen? And if something happens, then what will be the automatic downside?
Nikunj, the way the market is moving, I think market is not factoring in any major flare-up. One doesn't know whether that's going to be the reality or not. And if there is a major flare-up, of course, it will be a significant negative for the markets. There will be panic, at least initially, if there is a significant flare-up. That much I'm pretty much sure. Because by and large, we've been talking to multiple participants, both domestic as well as international. And, I don't think this geopolitical flare-up between India and Pakistan is in the radar. They're talking about tariffs, they're talking about multiple other things, growth slowdown, demand slowdown, but nothing about geopolitics as far as India-Pakistan is concerned.
Just one of those days where you would say, Thanda hai. And that's what you would say, Thanda hai. But, this is coming on the back of what, almost a 7% rally?
Yeah. 2,000 point rally.
2,000 point, that's approximately 10%. I mean, 8%, which is not bad. And everything has happened in 3 weeks.
Yeah.
3 weeks ago, where we were versus where we are, and where we could be in 3 weeks, that is also different. So my point is that what has changed? Excepting the 90-day window, earnings have not changed. Economy is not changed. Upgrades have not come. The tariff risks are still real. So then what are markets celebrating? What explains this 8-9% surge?
To an extent, I think FIIs have started coming back, and that's one thing which I think has helped Indian markets. Second thing, I think, with whatever uncertainty and whatever, flip-flop policy making is happening in US, that is scaring investors out of US, and a lot of global investors are looking at alternate opportunities, and definitely India is featuring prominently as far as investable country from their point of view, and that is also encouraging domestic investors, because they are probably expecting a lot of activity from FIIs in the near future. I think this is one thing which has changed between, let's say, 4 or 5 weeks back, before this Liberation Day, so-called Liberation Day in US happened. Everything started going topsy-turvy after 2nd April in the global economy, US market, and the overall economic scenario globally is concerned. So I would say that's the one change which has definitely helped India. The other significant factor, I believe, is RBI, they have handled the liquidity situation. We used to be in a situation where liquidity was extremely tight. From there, we have moved into a situation where RBI has systematically and consciously ensured that there is enough and more liquidity in the market. Of course, interest rates are also coming down. That also does help the cause of equities in India.
Okay, that's the take on the overall market. But Ambuja numbers just came out, and we've got Vinod Baheti, the CEO and whole-time director of the company, joining in to tell us more about how the quarter went by.
Our growth journey continues as we aim for 118 million tons by FY26 and 140 million tons by FY28 through our brownfield projects. Focus for FY26 is on commissioning some of our projects like Sankrail, Sindri, Salai Banwa, Dahej, Marwar, Kalamboli, Krishnapatnam, Batinda, Jodhpur and Varisaliganj. With 12 ongoing expansion projects in various stages of execution, we will add 19 million tons per annum of cement capacity and 11 million tons of clinker capacity. Additionally, 14 new grinding units with another 16 million tons of clinker, overall cement of 21 million tons, taking our total capacity to 140 million tons by FY28. We have enhanced our coastal presence, empowering a model shift towards increased share of marine logistics, driving reduction in emissions and cost. Our long-term fly ash agreements, supply chain synergies, and operational efficiencies ensure that cost reduction goes hands in hand with the relentless pursuits of quality. Our brands stand as a testament to the trust and quality with innovation, customer-centric solutions, and strong focus on performance to better serve our customers. We are strengthening our distribution network through investments in logistics, supply chain, resilience, and regional expansion. From sourcing superior raw materials to deploying cutting-edge technologies, we ensure that every bag of cement meets the highest industry standards. We are committed to reaching every corner of the nation with our high-quality, sustainable cement solutions. Our investment in green power reinforces our vision for a low-carbon economy. With sustainability embedded into our core operations, we are progressing on our overall goal of powering 60% of our plant capacity with 1 gigawatt of green power. We have already commissioned 299 megawatt of solar and wind energy in Khavda, whilst targeting 376 megawatt of WHRS capacity by FY28. On the industry outlook, we remain positive as cement consumption grew 6 to 7%, and we are expecting another 8% growth for FY26, driven by pickup in construction activities, rural demand, real estate traction, and increased government spending.
Like, at least going by the PAT, it looks definitely like a big beat. 303 is what the ET Now poll was penciling in, and at 349, just the PAT right now, I don't have the top line numbers, it looks like a beat. What we were anticipating in terms of the top line, we're anticipating a 37% uptick, EBITDA uptick of roughly about 28%, and PAT, we were actually seeing a downtick on a year-on-year basis. 654 crore rupees is what the comparable was, but 349 is definitely better than what we were penciling in, which is why you're seeing that huge spike come in for Trend, which is now holding up a good 2% as we speak right now. The operating deleveraging is going to wane on the EBITDA margin this time. Westside, Zudio, they're looking to add about 10 to 122 net stores on a sequential basis. The total surpassed 1,000 large box fashion stores, including 248 for Westside and 757 for Zudio stores. So the same store sales growth number is going to be extremely critical. And of course, what is their demand outlook? What's the store expansion guidance? That's something that we're going to be keenly looking out for. But just the first flash, and the stock is very much reacting to it already. But it's fallen also quite a fair bit, right? In the recent market correction, Kunal, what? It even dipped below 5,000, right? If I'm not mistaken, for a brief bit.
Yeah, it went to 4,500.
Oh.
4,488 is the low for Trend. And I think it came from, 10,000 plus.
But went up from 480 to 8,000 also, no?
Yeah.
I mean, the point is, it is the fall is not important. After the rise also, it is still up 10x in COVID time. Which
in
is
COVID times, yeah, of course.
So like almost like 400 went to 8,000, 20 times, and 20
Yeah.
times has come down by 30%.
Yeah.
So technically, if you held on to trend, even like in the bad patch of the COVID, it is still what could be called as a multi-bagger.
Of course.
1,000 crore market
But did you
cap.
exit at the peak?
Nobody
Would
knows.
you, yeah, exactly.
Hindsight only will
You know, I mean, I know this is the core portfolio stock, but yeah, so its notional value has been a lot more than what it's currently at, which is around those 5,400 odd levels. But yeah, a 5 rupee per share dividend as well. But we're just looking at the commentary, you know, and yeah, the competition from Shein, I think that's when the stock began cracking, along with the rest of the market correction, no doubt. But a lot of you know, competitive intensities also, which has been putting the heat on where Trent is actually going to head. And it's seen quite a fair bit of PE compression from the 52-week tops, no doubt about that. I think I saw the top line number and that didn't look as impressive as what the PAT figure is. I don't know if there is some extraordinary component or not this time around. But on a year-on-year basis, of course, the PAT has still seen a decline. It's only better than what we were anticipating. And largely, the revenue is in line. 4131 is what we were anticipating. 4,000 thereabouts is what they've actually delivered. But yeah, with Trent, it's really about what their same-store sales growth is, store expansion guidance, I guess.
See, with Trent, it's about A, expansion. It's B, about market share gain, and C, it's about you know, Zudio. What is happening to that magical brand which has really done wonders for Trent. So that the story of Trent can actually be weaved around affordable fashion, where Zudio really has been the, you know, star category, star brand for them, which has surprised and which has delighted everybody. Now, being a Tata group of company, they had advantage of scale, skill, size. But this is one success story which I think globally is hard to replicate, and the way markets have given Trent this kind of an P multiple, I think is quite extraordinary. I think 40% had become more like a benchmark for Trent. Anything under 40% markets would have said that, okay, is it slowing down? But if you're clocking 4,000 crore of revenue, that means you're almost, and if you grow at 30% also, that means 4 into 16. That means you are clocking on a turnover of about 15,000 crore, a 30% growth. Now that's enviable for any company with a 16% margin. When you know that competition has intensified from Reliance, from Aditya Birla, competition has intensified from, you know, let's say some of the other corporate quarters also. What is interesting here, you know, Aisha, is that this is one space and category where competition is intense, where corporates are trying to replicate the strategy what Trent has tried to replicate. It's a market where you have competition even coming from the, you know, new brands, especially which are backed by the so-called corporate houses. They've not been able to have an impact on Trent per se. Imagine on a turnover of 16,000 crore, if you're clocking 30% growth on that kind of a largish base, I think that's excellent. See, Aditya Birla Fashion, Kaustubh is ready? Okay. Kaustubh, can you break the numbers for our viewers that there is a drop of 50% if I do a year-on-year comparison? Why is that? And if there is a drop, why are markets not nervous?
Drop of 50%.
No, 650 has become 350. So there is a 46% drop on standalone numbers at a PAT level.
So I guess last year there was an exceptional item. So you need to you know, exclude the exception. So at adjusted part, last year it was around 290 crores. So you need to look at the EBITDA level. EBITDA margins came at 16%, which was better than street expectation. On the revenue front, the growth came at around 29%, which is exactly what they had given in the pre-quarter update of around 28% growth. There was an expectation that the EBITDA margins would be lesser considering the mix, but if you look at the EBITDA level, there was a bit, and EBITDA margins came at around 16%. So at operational level, it is beat on performance because of the better than expected EBITDA margins.
These numbers ensure that the high P multiple of Trent, which is north of 60-70 times 2-year forward, will it sustain? Can these numbers ensure that the Trent stock, which has fallen from 8,500 to 5,500, will that sustain?
The Trent is one of the preferred picks in the retail space. If you look at the performance of the company, consistently it has been delivering, double-digit growth. Store addition has been strong both in Zudios largely, in the value fashion retail space, if you look at the trends, expansion strategy, it has been robust, for past few years. And consistently, it is adding stores. This year also in Judio, it has added around 220 stores, and website around 12 to 13 stores. So I think that strategy will continue. With that, we should expect, the like-for-like growth to be quite steady for the company, considering its business model. And if you look at the balance sheet as well, the balance sheet of the company is quite good. So in the retail space, I think trade is one of the preferred stock, considering its business model and considering its overall operating performance, which has been unique for last few years, especially post-COVID.
Would you be looking to revise your price target upwards? The stock is already spiked a good 4%. It's already hit 5,400 right now.
So we need to work on the numbers, and accordingly we will, take a call on the price target. But it is one of our preferred pick in the discretionary space, considering its long-term growth outlook, and especially the stock has corrected by around 37 to 40% from its high. So in the discretionary space, it is one of the better picks.
I've seen wealth creators in in the markets, but Trent is like right at the top of pedestal in terms of a company which had very humble beginnings and now is a market leader per se. Kunal, big spike, big crack. Is now Trent going to be a market performer, underperformer, or an outperformer?
I think it should be a market performer. I don't see the stock to be a major underperformer because the correction of 40% for the stock from that 8,400 mark towards 4,400 levels, I think that major correction is now behind. The stock is just about trying to grind itself, establish a range over here. So that 4,500 mark is a huge support for the stock. And in the last 3 months, we've seen the stock taking resistance at 5,800 mark, which means there is a potential of the stock moving up higher by another 200-300 points before it retests the first major resistances. So I would believe that the stock should now be more of a market performer and trying to just about consolidate the gains the stock has seen over the last 4 to 5 years.
Okay, Kunal, good to have you on the show as always. Sandeep, thanks for your time too. Apologies, couldn't chat with you as much, but we're going to wind it up right here in this edition of Closing Trades, and I'm going to hand it over to Snehi for the closing trades. Okay, we'll come to her in just a second from now, but of course Trent has been quite the performer today. 240.
If you like this video, then like, share and subscribe to ET Now.